Now, another way, of course, that finance can support growth is through well-functioning capital markets. And last week, we launched the Capital Markets Union, which is our flagship project to build a single market for capital for all 28 member states. While President Juncker's €315 billion investment plan should help kickstart growth, the goal of Capital Markets Union is to unlock investment for the long term by linking investors and savers with businesses and growth. And we believe that a single market for capital will benefit the whole European economy, helping to unlock the capital that's currently frozen and putting it to work to support Europe's businesses, perhaps particularly our SMEs and startups. And we want to remove the barriers that stand between investors and investment opportunities. And we want to make the system for channeling those funds more efficient. In many parts of Europe today, companies often struggle to get the funding they need to expand. They tend to rely on the banks and far less on capital markets. And here in the US, obviously, the opposite is true. This reliance on banks makes the European economy more vulnerable when bank lending tightens. And we saw this happen during the financial crisis, and we saw banks and investors retreat to their home markets. So our capital markets remain fragmented, largely along national lines, and this is what we need to fix. So we hope that the Capital Markets Union will act as a major upgrade to a network that connects those who need financing with those who have the money to invest. Europe, of course, already has a financial network, but now it needs better connections to make that network become faster, more developed, and more efficient. Capital Markets Union is also about complementing the role of banks, not displacing them. Some companies would welcome more options for financing, and in some EU countries where banks are not lending, our startups and our SMEs are struggling. So yes, we do need to be able to tap into alternative sources of funding. And if we take an example and look at venture capital, the US venture capital market is about 5 times bigger than in the EU. And if European venture capital markets were as developed as those here, we estimate that companies would have been able to tap into an extra €90 billion of funding in the 5 years after 2008. So building a single market for capital will be a long-term project, and it will be an ambitious one. We'll have to work hard on difficult, sometimes long-standing issues, such as securities laws, investment restrictions, tax treatments of debt and equity, and insolvency regimes. But the prize is a big one. And if we can get it right, companies will be able to access the funding they need from across the EU.